The world needs ocean logistics companies like Pangaea. They get materials from where they get mined over to where they need to go into a manufacturing process or build construction and things like that. Pangaea has been doing a lot of movement of materials around the world, and they've been really successful over the last few years. I've been tracking and analyzing Pangaea for 3 years, and I'd like to tell you more about this company. My name is Victor. I have an MBA. I have a lot of business experience and like to put that experience to use by analyzing companies like Pangaea. If you like content like this, subscribe to my channel. I provide videos like this as well as some investing strategy. I also would like comments on this company. Tell me what you think of Pangaea. Let me know what you think of my videos, good or bad. Let me tell you more about Pangaea. All my investments go through a process, and it's the same process for my investments. I want to ask 4 questions and make a decision whether I want to buy, hold, or sell my shares. First, do I understand the company? Do I want to be part owner of this company? Do I like the industry? Do I believe the management team is operating the company well? Is debt less than 3 times EBITDA? And am I getting a discount on this stock? Therefore, I could expect my investment to go up over time. Based on the answers to those questions, I buy, hold, or sell this stock. So the story of Pangaea is a good one. It's kind of a small company. It's a tiny valuation, but that in itself is really attractive because I've seen my investment go up over time. I've sold these shares on 2 occasions. I made really good money, and I'm on my 3rd swing trade with the stock. And they operate vessels where their specialization is moving dry goods, so a lot of aggregates, a lot of materials from where they're mined over to where they're needed. And they do a really nice job. They also know how to sail the northern routes, which have a lot of ice in them. So they have ships that are specially designed for that particular use case. So they've done, they're operated really well. And it's an industry that's risky. It's a little bit like commodities where when shipping rates are high, these guys make a lot of money. When shipping rates are low, they struggle making money. And we're currently in a shipping rate era where shipping rates are okay, but they're not as good as they were 2 years ago. So that's one thing to keep in mind as you look at this industry. Pangaea has really grown well. If you look at their growth over the last 4 years, they grew 88%, which is awesome. The total revenue, if you compare the first quarter of 2022 versus the first quarter of 2023, their revenues did go down because of shipping rates. So the company still operated really well. Even though shipping rates are down, they're still profitable. So it's great to see that. Taking a look at their balance sheet, it's nice and healthy. They have a good cash balance and they don't have a lot of debt. In fact, they have less than 2 times EBITDA of debt. So really strong balance sheet. And it's good to know that since they are in a cyclical industry where shipping rates go up and down. So if shipping rates really go down, these guys have the cash and a solid balance sheet to really weather that bad period and really thrive when shipping rates go up. Their statement of cash flow looks great. They've always been a really good cash generating company, and their positive cash flow is $11 million. This is a really small cap, by the way. And so really good company. It has gone down from last year. It decreased 17%. And again, shipping rates are to blame for that decrease, but the company's operated really well. So I'm going to value the company using 2 methods. The first method is by discounting all the free cash flows that I expect in the future. And the second method is by looking at the earnings per share. Taking a look at first the cash flow method, I'm going to take a conservative, just 40% of what they did in 2022. This past year, they had $11.5 million of free cash flow. So they're on a run rate of $40 million or higher. I'm not going to grow those rates, those amounts very much. I'm just going to have a nice conservative 2% growth rate in the future. I'm going to discount those by a very high weighted average cost of capital since it is a small company in a cyclical industry. So I'm going to use 11%, which is a nice high discount rate. Based on those factors, all the free cash flows are worth $409 million. They have $129 million of cash on the balance sheet, and they have $125 million of debt on the balance sheet. So that gives us an equity value of $413 million. Their current market cap is only $313. So it really offers up a 33% discount if we use the free cash discount method. If we look at earnings per share, it's expected they're going to have earnings per share of 86 cents per share. I'm going to give them a good solid PE of 10. And based on those factors and a 2% growth rate, I get a valuation of the stock at $7.42, but the stock currently trades at $66.74. So it has about a 10% discount on the stock using the earnings per share method. Overall, I blend the two and I get a 26% discount available on the stock. The stock price year to date's been doing really well. It actually has an upward, trajectory. So it looks really good, 24.5%. It's beating the S&P. It also has a lot of volatility. So this is a small company. So when the market has a little bit of fear, the stock tends to dive, and that's when I buy. So it gives me a lot of opportunities to buy on really jagged dips and then hold my stock, since they do pay a 6% dividend. And I've seen it go up. On 3 occasions, I've seen the stock go up and I've sold most of my shares. And on one occasion, I made 60% on the stock. On another occasion, I made 50% on the stock. So a really good swing trade stock for me. So Pangaea pays an attractive almost 6% dividend. And if you look at the current payout ratio, it's 29%. So nice and low. So they should be able to pay this dividend for some time. So let's revisit the scorecard. Is it a company I want to own? Yes. And it's an industry that's risky, but I like this industry because if I study it, I get an advantage and can trade in and out of the stock and make money. The company, the management team's doing a really nice job. They operate their vessels very well. They really know what they're doing. Balance sheet is in really good health. It's only 2 times EBITDA. Debt is only 2 times EBITDA. And there is a discount available on the stock. So I'll be buying more shares of Pangaea, especially on dips. Hey, thank you for watching my video. I appreciate it. I hope you found it interesting and learned something new about Pangaea. Please keep in mind, this is my experience as an investor of Pangaea. I'm not making any recommendation to buy the stock or sell the stock. This is not investment advice. It's really for entertainment and educational purposes. Please do me a big favor and like my video. Consider subscribing to my channel, and please provide comments on the company, what you think of Pangaea, as well as my videos. Any good or positive feedback would really be appreciated. Thanks again for watching, and good luck investing in 2023.